Bruno with Bank of America for being here. Thank you so much, I really appreciate it. And Buddy Green with Bay Equity, so thank you, Buddy. Also thanks to Kayla for helping and setting up everything. So thank you, Kayla. And Andrew for signing everybody in and for all the prep that went in behind the scenes. So thank you all. One of the reasons why we wanted to have this class, and it really was for sellers and buyers, just to dispel some of the myth that's actually in the media right now. Everything's doom and gloom, right? The market's crashing, houses are coming down. I mean, I heard somebody say that the housing market in Houston is down 50%. But when you check the facts, that's just not true. If you listen to people like Barry Habib, I'm sure you guys know him, this man is saying that the market's gonna turn in, he said 6 months. Prices are gonna remain where they are, and he believes that interest rates is probably gonna drop. I don't know if you guys may share those same sentiments. However, if that's the case, then the doom and gloom that we're hearing is just that, it's doom and gloom, because negativity sells. And people like negative stuff. If it's positive, then it's just not news, right? Because why would we want people to be homeowners when we have landlords? So I hope that today we give you some information that actually can help with the home buying process. Or if you're thinking about selling, we do have an agenda. And in our booklet that we passed out, we have some information on credit. So one of the main things, if you're gonna buy a house, you wanna know about your credit, because your credit determines your interest rate, also how much you can buy, along with other factors like your income and some other things. However, your credit is definitely vital in buying anything. If you're buying a car, buying a house, it's definitely a big thing. The higher your credit score, I will say sometimes the better the rate, which I'm sure these guys can attest to. We also have some packets up here with the programs for Riverside County for purchasing a home with assistance. Also some rent versus buying. So if you're currently renting, we wanna make sure that you understand, you're paying somebody else's mortgage, you could be paying yours. I call it a virtual bank account. So every time you pay your mortgage, you're buying down your equity, you're buying down your principal, so you're gaining equity, and that's your savings. So we do have other information here, so feel free to take anything that you need and put them in your packet. Also, we're gonna have Q&A, so after Bruno speaks, Bruno's gonna speak first, then after he speaks, we will ask questions and answers if you have any. So we'll do the Q&A, and then after Buddy speaks, then we'll do another Q&A, just so we remember what he's saying. I personally would probably forget it. 21-year-old brain. Okay, so at this moment, since Mr. Mack is not here, I'm going to turn it over to Mr. Bruno, and he will start.
Thank you very much. Thank you very much, Kate. I've got a flyer over here that you're welcome to take, and the first program that I'm going to talk to everybody about is Bank of America's Community Homeownership Commitment. I am a community lending officer with Bank of America. I've been in the mortgage business approximately 45 years, so we've seen a couple of turns in the market. One of the things that Kay just mentioned, which was really interesting, is the rates, and that's sort of the elephant in the room. When I first purchased my first house, I paid 10% on my mortgage. Second house, we paid 13% to get into that house, and I was happy to pay it. The way that I look at it is if you're getting a 6-7% mortgage, you're going to pay that interest rate. If you're renting, you're going to pay 100% interest because you are paying your landlord's mortgage payment. So what do you want to do? You want to pay 100% interest, or you want to pay 6-7, which is where the market is. So a little bit more on our community housing program. Bank of America offers entry-level buyers a grant of up to $10,000 to help them with their down payment. $10,000 or 3% of the sales price, whatever is the least of the two. In addition to that, we're also going to help you with the closing cost grant of up to $7,500. So between the $10,000 down payment grant, the $7,500 closing cost grant, which will go towards non-recurring closing costs, we're looking at a total of $17,500 that we can help you with. So how does it work? What does it take to qualify? First of all, credit's gotta be relatively good. Kay touched on that. Client comes in, you come in, you talk to me, and you know, your credit isn't really where it needs to be. What we will do is we will send you to one of our HUD-approved counseling agencies. We really want to see that credit score up in the 700s to qualify for this particular program because it's a 3% down payment. We're going to help you with $17,500. Your credit score is in the low 600s, not going to happen. We're not going to be able to get you approved. HUD-approved counseling agencies, they're great. What they do is they will sit down with the client, they will look at their budget, they will look at their income, they will look at their assets, and they will look at their credit, and they'll do whatever they have to do to work with that client to help them so they are mortgage ready. And a lot of times it's just taking that first step, knowing, okay, what are the hurdles? I've helped many people over the years where it's taken them well over a year to get mortgage ready. That's what it takes, that's what it takes. And in most cases, it was an issue of maybe the credit, a little bit of a down payment money, or a combination of both. These HUD-approved counseling agencies are at a cost, in most cases, a zero to you as a buyer. So they're out there, and what they want to do is they want to help you. That is their job. And it's such a crucial component because, again, the thing that we're looking at is the income, the assets, the credit, and liabilities. Now let's talk a little bit more about our grant program. What does it take to qualify? Indicated credit's got to be relatively good. We got to be at least in the 700s. Income in San Diego County, as long as your income is under $160,000, we're good to go. So 160K or less, we're good. Husband, wife come in, both of them, they're 200,000. Husband makes 140, wife makes 60, $40,000. Let's just bring husband on board. Let's get them the money. It is not household income. It is whoever comes on board and is going to be on title. Whoever's going to be on the loan, I really should say. So another component of this is that you do have to take a home buyer education class. Real easy class. It's a class that you would do online through Freddie Mac's homework and HomeWorks education program. So it's part of what you would have to do. So again, $17,500 grant, income component under $160,000 a year, credit's got to be relatively good, and on top of this, we're going to throw a couple of sweeteners in here. We will go ahead and we will go out at premium pricing. Right now, depending on the down payment and so forth, you're probably going to be in the low 7s, very high 6s, realistically speaking, in today's market. With this particular program, we are going out at 50 to 75 basis points below what market rate is. Market rate's at 7, we're going to go out at 6 1/4. Market rate 7 1/4, we're going to go probably mid 6s. So on top of everything else, we're going to give you premium pricing on this particular program. And on top of that, we're going to reduce the mortgage insurance component of it. Anytime you come in with less than 20%, you're going to have mortgage insurance. Mortgage insurance covers the lender should you default on the loan. Mortgage insurance can run $200 to $300 a month just in itself. The lower the down payment, the higher the mortgage insurance is as a rule. Again, with this particular program, our mortgage insurance is also reduced. So we do everything we can to try and help the buyer get into that particular program. Again, if we have problems, we have issues, then we'll try and work it however we can to help that particular buyer get into this program. So again, this is Bank of America's Community Homeownership Commitment Program. And what I'm going to talk about, and also any questions that you have, please, when I'm done, let's hold them to the very end, because I'm going to talk about two programs. Again, first our program, and then I'm going to talk about the San Diego Housing Commission, which has just a really awesome program. And it's good in the city of San Diego, and it's also good in the county of San Diego. And the county of San Diego would be any of the unincorporated areas. Up here, the areas that qualify for the program are Vista, and I believe San Marcos, for the San Diego Housing Commission program. Next slide, please. And the way that it works basically is as follows. The city of San Diego will come in and they will lend you up to 23% of the sales price. Lend you 23% of the sales price. What happens? Mortgage insurance goes away. You no longer have mortgage insurance. It is a loan. The money that the city of San Diego puts out, they are lending it to you. It is not a grant. grant, it is not free money, it's money that you will have to pay back. But the way that it's structured is, as long as you live in the property, as long as you don't rent out the property, as long as you do not sell the property, it will be a silent second on the property. Silent second, sleeping giant. As long as you don't do any of the things I just mentioned, it just stays there. At the end of 30 years, the loan comes due in full. You have to refinance, you have to do whatever you need to do at the end of 30 years. Also, the city of San Diego charges interest on it. They charge 3% simple interest on that loan. The interest accrues. It's a negative amortization sometimes. People ask me, well, the balance is going up on my second mortgage. Yeah, that's true, but if you look at appreciation in San Diego over time, chances are that the property is going to appreciate much, much higher than what you're looking at in terms of that balance going up. In addition to that 3% that the balance is going up, you can always make payments on that interest. You can make payments on that principal if you want, but you do not have to. The second mortgage does not carry any mortgage payments on it. It is, again, all due in full at the end of 30 years, 3% simple interest. And what are we looking at in terms of sales prices? An attached property, $657,500 is the maximum in the city. Bear in mind, there's two different programs, a city program, county program. They're very similar, but there are some minor differences. 3% is the down payment that's required on this particular program. So 3% down payment, the money can be gifted from a family member. You can borrow the money from your 401k, but it does require a minimum of a 3% down payment. Now, what's probably the toughest component, especially in San Diego and in this particular program, is the maximum household income limit is at 80% of the area median income. And later on, we'll see a slide there, and it's based on family size. As an example, a household of one person, I'm going to throw a number out, we're probably at $78,000 max income household of one. Household of 8 people, we're going to be maybe about $120,000 in income. Again, approximate numbers. More people in the household, the higher that we can go ahead and we can go ahead and qualify. So versus our program, we're at 150% of the area median income. So we have a lot more flexibility income-wise, but with this particular program, it just gives you a lot more buying power. Next slide, please. Okay. All right. Another part of the component, thank you, is that on top of the down payment loan, they're also going to give us some help with a closing cost grant. And the closing cost grant is up to 4% of the purchase price or $10,000. And as far as the closing cost grant is concerned through the city, at close of escrow, the $10,000 is forgiven. No free money, does not have to be paid back with the city program. So we're looking at the down payment component. The city's also going to go ahead and help you with $10,000 for the down payment in the way of a gift. Next slide, please. Okay. And let's see what else we have here. If you want to do a freestanding as far as the closing cost component of it is concerned, without doing the down payment component, you can do just freestanding on the closing costs, and under those terms, it would be up to 4% of the sales price or $10,000. And on that one, instead of 80% of the area median income, you can go up to 100% of the area median income. So that's good to know, and that's another component that's out there that could possibly help you. Next slide, please. Okay. This one is a little bit hard to read, but it just gives you a sample of how it would work. Conventional financing versus financing through the city. The bottom line is just a lot more favorable doing the city financing. Next slide, please. Next slide, please. Okay, and what we do on this particular program, because we've really in the past had a lot of pushback from real estate agents when you come in and, as you know, you have an offer that's got down payment assistance, and down payment assistance has always had that negative connotation. Oh, look at this, it's not going to close, whatever. Especially in the market we've had over the last year. The market we've had over the last year, I mean, getting one of these approved is almost impossible because you were looking at 12, 15 different offers. People were coming in at 40, 50,000 over asking price. With this particular program, it's not going to happen. It's, but when I'm on the pre-approvals, what we do is we will go and submit the loan to the city of San Diego. We will get it pre-approved. So we know that once we get you into escrow, that we're going to be able to close that loan down the road. Next slide, please. And what we try and do, our goal and always is to try and close these transactions in 30 days. It used to be a 60-day turnaround time on these. We make every effort to close them in 30 days, and that's not to say that it will close in 30 days, but that is our goal. And again, that's always been one of the negative connotations associated with the down payment assistance loan. It's just the turnaround time that it was taking in getting these closed. Next slide, please. Okay, next slide, please. This goes into a lot of detail. Next slide, please. Okay, requirements. All household members must be first-time home buyers. With this particular program, the city and the county, they look at all household income. Bank of America's program looks at whoever's going to be on the loan. If only any husbands on the loan, then we don't care about wife's income. If they're under 150% of AMI, with us, we're good. We're not concerned about wife's income if only husband is coming on title. With the city is very, very concerned about everybody's income. Husband, wife, you've got grandma living with you, they're going to look at grandma's income because she's going to be part of the household. Anybody over 18 years of age, they're going to look at their income, so they're going to deal with all of the household members. So it really, really is something where they take a good hard look at this, because this is our text money that's being put out there. And we want to make sure that the people that are going to qualify for this program qualify based on household size and income. Next slide, please. Okay, next slide, please. Okay, here we go, income limits. Thank you very much. So 150% of AMI, and this is probably one of my biggest challenges, at least in the San Diego housing market, because the houses are, I mean, I don't have to tell you what a hard market this is because of the sales prices and getting people to qualify. The income limits that we have for a household of one is $72,900. Household of 8, we can go up to $137,450 in terms of income limits, and that represents 80% of the area median income based on that household size in San Diego County. Realistically speaking, right now with today's rates and so forth, a household of 6 is probably looking at a sales price, and I'm gonna just estimate this for you, maybe in the $600,000 sales price range, give or take. So again, that's part of a challenge for us. 600,000 household of 6, they're gonna probably need at least a 3-bedroom, preferably a house, preferably. But to find a house for 600,000 in San Diego County is still a little bit of a challenge. They're still out there, but it's still a little bit of a challenge. So those are our income limits for the program. Okay, next slide, please. Next slide. Yeah, credit and debt income guidelines, just to give you a little bit of the minutia. Credit's got to be relatively good, but they will go off a 640 credit score or better. They do want to see a minimum of 3 trade lines with 12-month history required. And we can do alternative trade lines with a borrower's got limited income. Alternative trade lines, we'll look at their utility bills, we'll look at their landlord ratings, we'll do whatever we got to do to make it work. Maximum ratios, 30% on the front, 45% on the back end. And next slide, please. No collection accounts. Next slide, please. Okay. Next slide. Oh, and lastly, this is probably one of the most important things. The property's got to be in relatively good condition. Again, another challenge that we have is that the city will do what's called an HQS, Home Quality Standards Inspection. In addition to a regular inspection, they will send out an inspector with a list of 35 things that is on that. It passes or it doesn't passes. Heater's not working, it's gonna fail. So if there's one thing on that list that fails, the whole property fails. The inspector has to come back out, and we have to have a pass on that HQS. So there's actually a dual inspection process. And I throw this out at you not to scare you or blow you away or whatever, but I want you to be aware of the details. And the devil is always in the details, as they say. And lastly, they do require a clearance, section 1 and section 2, regardless of what's in the purchase contract. Now, in the past, we've seen that we've done the inspection, $1,200 comes back in termite-related work. We've got a closing cost grant. We'll take that money out of that closing cost grant and we'll pay for the termite work. The downside is that has to happen. We do have to have a section 1 and 2 clearance. If it's a condo, as long as the HOA indicates that they will take care of any termite-related work, then we're fine with condos. Next one, please. Oh, and then also, most importantly, we talked a little bit about home buyer education earlier. We do require a home buyer education. Ours is online. You can do it in maybe 2 or 3 hours. The city has a much, much more in-depth home buyer education requirement. Theirs is a one-on-one 8-hour home buyer education program. Like B of A, we want to make sure their buyers are as well informed, as well educated as possible when it comes to home ownership. What we want to do is we want to help them, we want to get them into a property, we want to make sure it's sustainable. The more education a home buyer has, we feel, the better. Again, minimum of an 8-hour class required for a pre-purchasing counseling requirement. Alrighty, and these are some of the areas that the county program is good in. If we're in the North County, we're looking at San Marcos, and we're looking at Vista as far as where the county programs are good. And all of the city of San Diego. City of San Diego definition, zip starts with 921, you're good to go. 921 zip code. All the way from San Isidro, all the way to the border of Oceanside. So, having said that, that's pretty much just a brief synopsis as to what's out there. Feel free to take one of my business cards whenever you have a scenario, if you have any questions, anything whatsoever. Feel free to contact me. This is not for everyone. It's a difficult program to get people into, but let me tell you, it's very, very rewarding. I can do any kind of lending. As I said, I'm a mortgage professional. I've been doing this for a while. I choose to work with the entry-level component, which in all sincerity is the toughest client to work with. It's a hand-holding from start to finish, but I tell you, when I close that transaction, I sleep so well at night. I go home and I tell my wife, well, we closed the deal today. Yay, you know, it's just an awesome, awesome feeling. I can't think of anything else that I would rather do in life, okay? And I'm at the very end of my career. Again, I can be doing anything that I want in terms of lending, jumbo, whatever, reverse. This is my specialty and I have a passion for it. So, having said that, I'm going to open this up to any questions pertaining to our down payment assistance through the Bank of America, County City program. Ma'am, please.
Yes, you said a lot, but I made sure I put a question mark.
Sure.
Okay, I wanted to, you were talking about the first time buyer. Is there a time frame for as a number of years you consider a first time buyer?
The city and county, it's a 3-year.
3 year.
3 years.
All right, so
The Bank of America program, no first time buyer component. The Bank of America program, city, county, 3 years.
3 years,
3 years,
okay. All right, 2 more questions.
Yes, ma'am,
All right.
please.
Okay, this is really, are you guys gonna change that minimum income at 72,000 and probably raise
I would
that?
love to see it change. 80% of AMI is so difficult. It is so hard. That's probably one of our biggest challenges. Bear in mind, it's because of our housing prices in San Diego. I pre-call a lot of people, and I'll pre-call them for $350 with a $300 HOA fee, and they'll say, Bruno, but there's nothing here in San Diego for that price.
Yeah.
It's income based. We need more income. Do you have a brother, sister, mother, father living on title with you that's going to live with you that has income, has good credit, so we can get that income increase, so we can get you to $500,000-$600,000 property. But with this particular market that we're in, we're hamstrung. We really are. It really makes it so hard. And that's probably one of the most difficult parts that we have is it's just so expensive in San Diego. And who knows? 80% of AMI probably will not change though. That probably will not change. That's been there since day one. I've been doing this program for probably 15 years plus. Hasn't changed. We've always been at AMI. But every year the AMI does change. If the income is higher, the AMI will go up. And this year it did go up. Thank goodness. So the AMI will go up, but not the 80% component, unfortunately. What else?
One last question. Okay, so it sounds like this is probably not a good program for someone that wants to buy a second home fixer-upper because of you having to live in the home, then also certain conditions. Am I correct?
You're absolutely correct. Has to be owner occupied, first time home buyer. If you already own another property, you're not gonna qualify. It has to be owner occupied. So, no, and the fixer-upper component, if it's a fixer-upper, don't even go there because the HQS that has to be done is brutal. What the city and the county want is, they don't wanna put somebody into this program who's gonna buy a property that's a nightmare due to maintenance issues and, electrical and foundation and the roof, and no, they don't wanna go there. That's not what it's all about. We wanna help these buyers by getting them into a property that has a lot of different maintenance. We're not doing them any service whatsoever. What else, ma'am?
I'll leave it open for somebody.
And anything else?
I have a
Okay.
question. So, on the Bank of America grant, does that come with restrictions on how long somebody has to stay on the property?
No, you sell the house the next day,
Oh,
at close of escrow, it's free money. It's a grant, so no restrictions whatsoever. Hopefully, another thing that I wanted to sort of touch on is the rates. We talked about the rates. The rates are what the rates are today. The way I look at this is tomorrow, down the road, rates drop. I mean, these buyers can always hopefully come back to us. We see that happen and we want to refinance them. We want to get that mortgage insurance out. Whatever we want to do, the mortgage rate you get today is not necessarily the rate that you're going to have for the life of the loan, even though the rate will be fixed for a 30-year period. So I always tell them that. Now, who can predict what the rates are going to be 2-3 years down the road? Nobody really can. No, nobody can. But at least, please bear in mind, keep an eye on the rates. You see it drops a percentage rate, a percentage, rate and a half. Pick up the phone and call me and let's talk. And the same is true with the mortgage insurance. The mortgage insurance will drop off after a certain amount of time. As a rule, it's going to be 8-10 years down the road, very possibly. But if you see the property's appreciating, again, call me. Let's get that mortgage insurance taken off, which a lot of times can be $200-300 a month. Okay? Any other questions? Okay, and lastly, I want to say that any other questions that you have, Buddy's going to be following me. Call me, call him, call us both. Please, the more information you get, the better. We want you to be as well informed as far as buyer is concerned. Get out there, talk to different lenders, get different input, talk to people that have recently closed on the transaction. It's very, very important for us as a lender for you to be as well educated as possible in the home buying process, and we will be there for you. That's what we do. And I also want to thank you very much for the opportunity to be here this Saturday morning. I know you could be out doing anything on this beautiful Saturday morning, so thank you for being here. That does mean a lot to us, and Buddy and I will be here for you with any other questions that you have. If you have anything after the meeting, maybe on a personal basis, I'm going to stick around for a few minutes. Feel free to come up and talk to me with anything that maybe you didn't want to bring up at this point in time. Lastly, I want to ask if there's any other questions before we bring our next speaker up.
let's give Bruno a round of applause. Thank you so much, Bruno.
You're welcome, Kate. Thank you very
And
much.
Bruno had a lot of great information. I really enjoyed his presentation, especially as much information as he gave on the City of San Diego's program and also the Bank of America program. And there are differences. I know some of you may still have more questions, but he's here and he'll be sticking around for a while, but you can write it down. His contact information is here, so you can also reach out to him. And at this time, I'll bring up Buddy Green with